But from hot inflation to cold weather, let's talk about the weather. Lowe's also missing on earnings this morning. The retailer said unseasonably cold spring weather caused a slow in demand for Q1. Now, same-store sales and home improvement sales both dropped in the quarter. On the flip side, sales to contractors, that did get a bump, and you're taking a look at some of those comps, same-store sales down 4%. But one thing that also jumps out here for me is the margin growth, and that growth decelerating here to a point that we haven't seen since pre-pandemic times. And quite frankly, when you look at where that growth has been, 2019 to 2020, that margin growth, operating margin growth, it was 23% on comp sales of 26%. Or comp sales increase of 26%. That dropped to a comp sales increase of 6.9% and margin growth of 17%. And so all this to really frame the picture of how low that margin growth, that operating margin growth is going to be, and what they're forecasting this year, forecasting comp sales growth, is going to be a toss-up right now. It's either a loss or a move higher of 1% is what they're forecasting right now.
Yeah, I'll start with a quick positive before I give it to Lowe's, so to speak. Now, you mentioned the pro business there, Brad. That was right. That was a strong part of Lowe's business in the first quarter. That was good. Heard the same thing from Home Depot on its earnings call yesterday. So those pro backlogs or those contractors out there doing jobs, that appears to be good. What appears to be weak is do-it-yourselfers, the average homeowner trying to perhaps go out there and build a fence or go out there and get a new grill. That appears to be where that weakness is coming from right now in the space. But I will say this, and I have to knock Lowe's here. They came out here and reaffirmed their full-year sales outlook, same-store sales outlook, and two margin outlooks. That is gross margin, operating margin. And this is, first of all, I don't know what planet they're on, guys. The results at a Target and Walmart were absolutely shocking. And you're seeing a slowdown here at Lowe's. I think it would have been better served for Lowe's to come out here, mark down its guidance, give investors something more realistic, and just get it out of the way here. Because right now you're looking at a full year outlook for Lowe's that really makes no sense whatsoever and is completely detached from the realities we are seeing in retail right now.
Well, to Brad's point, though, it's very difficult to even know what's going to happen right now. But I guess maybe pull your guidance or err on the side of caution, if you will, in this kind of an environment. And just one more thing to mention as we talk about the backdrop for the housing environment in particular. We did get housing starts today, by the way, and housing starts came in decreasing month over month last month. These are the April numbers, 0.2% to an annual pace of 1.72 million. And that is a little bit lower than estimated. We also got building permits, by the way, which let you know what's happening future-wise for construction, and that fell to an annual pace of about 1.82 million units. So we are still seeing inventory expansion, but it's maybe not quite as high as anticipated. We're going to talk much more about housing in the next hour.